the LA fires that are going on right now are tragic enough. But now we're hearing reports of price gouging
Yeah,
out there. And it's just insane.
it really is. And, in California and in most states, there is a limit to what you can increase prices in a natural disaster. We have disasters here in the Houston area, but they're hurricanes.
Right.
So those are a little bit different than fires. They come and they go. 12 hours after the hurricane passes, everybody's out in their yard cleaning things up. And I think it's important to note that this is still an ongoing situation in California. The damage toll is yet to be calculated because hour by hour and minute by minute, things are continuing to get worse.
Yeah. And if you don't live in an area that gets affected by disasters like this, like you don't really get a good sense of what that's like.
Right, sure.
And that hey, all of a sudden the home that you've had for 20 years, in a hurricane, you would go back to that home and there'd be some left and you'd rebuild off of that.
Right.
In California, it's gone.
They're
Just
going home to
completely gone.
ash.
Yeah, it's just ashes. You have nothing to start with. And then the staggering amount of people that are in the same situation is creating some serious market demand.
Yeah, and that's where the price gouging comes in.
Right.
And I think it's important to talk about that because on one hand, you have the price gouging where, let's say, for example, you're offering a house for rent. And in California, it's not uncommon to see a 2-3 bedroom house rent for $5,000 a month or more. And you're seeing some landlords ignore the price gouging restrictions that are in place, and they're listing it. They're immediately bumping up the listing to $9,000 or $10,000 a month.
Right.
Now that is a real problem. That's taking advantage of somebody who has fallen on tough times and literally lost everything. With a hurricane, you come back and you have your clothes for the most part. Maybe some things are damaged, but a lot of what you had before remains. In a fire, as you said, everything is basically falls to ash.
Right.
And
Right.
so, these people are leaving with the clothes that they have on their backs, and they're trying to find a place that they can live while the rebuilding happens and stuff like that. And you have these landlords that are jacking the prices up, which is totally wrong, by the way. And it's part of the reason that, me as an agent, a real estate agent, and you as a loan officer, there's a lot of, we get a bad rap sometimes, and sometimes it's justified, and in most cases it's not. But I think we have to parcel out what is the difference between price gouging and just supply and demand, right?
Right. And I think the thing to remember here is that, you hear about the price gouging, but it's not the majority.
Right.
Like that's not really what is happening, every day on every transaction. The reality is if you all of a sudden put your house up for rent for $5,000 a month, and then all of a sudden you got 20 people in the first 5 minutes, and they're offering 5,000, 6,000, some guys offering 10,000, some guys offering 15.
Right.
What do you do as the landlord? I mean, are you just supposed to say, oh, you know what, I can only take 5,000? You have 20 people to choose from now.
Yeah.
How do you determine which one you go with?
It's difficult.
It would be difficult, exactly. And so a lot of what's going on, right or wrong, right now is market-based pricing. It's the market is that. There's not so many places to live, so that's what's happening. And it's
Yeah.
not that they're setting out to defraud people. They're not setting out to take advantage of folks. It's just that, I mean, it is what it is. And we see it here during hurricanes. Contractors are another great example. Like if your house is destroyed and you want it rebuilt, if you're offering a higher price, they'll probably do yours first.
Yeah. And the way I look at it is if you saw these fires on the news, you realize that everybody in the Pacific Palisades and all these other places that are experiencing fires are going to need a place to live, and you immediately jacked up the price of your rental by double, then shame on you.
Yeah.
However, if you are a landlord and you kept your listing at $5,000 a month,
Yeah.
and now all of a sudden you're fielding all these rental offers, it kind of just seems to me like a multiple offer situation like we see in real estate. I have one of those going on right now. As we speak, I have to speak with my clients later on because we have 4 offers on the house and they're all over asking price. And, you feel bad for the people that want to buy the house and they can, but at the same time, you're representing the seller and you have to get them the most money that you can. So it's a definite catch-22, but in my mind, the distinction's pretty clear. Like if you immediately jacked up the price, then you're probably an unscrupulous person. You're trying to take advantage of people in tough times. if you're fielding multiple offers and somebody's offering you $10,000, they've got great credit, they've got great income.
Yeah.
You as a landlord, it's a very difficult thing to walk away from. And I want to kind of talk a little bit about the insurance too, because that's going to be a big component in this. And
Right.
you know, how does it affect the immediate Los Angeles market, and then how does it affect the market as a whole, coming forward? And then also, a lot of policies, they dropped fire, a couple of months ago, right? So what do those people do?
And not only did they drop, so your insurance policy anywhere in America covers, for various things, wind and fire and, I don't know, an earthquake or whatever.
Yeah.
And now in some of these areas like Houston, there are policies that exclude windstorms. They don't cover for hurricanes.
Right.
Because there's a propensity here, or it's likely to happen.
Yeah.
Right. And so some of them, you have to go get a separate insurance policy for the wind. And that's in California, because of the fires. A lot of these major nationwide companies, won't name any names, but they have dropped people, and it happened like 3 months ago.
Yeah.
And they dropped the fire coverage. And so now they're left with, no choice but to go with the California Fair Plan. Well, Fair Plan insurance, and a lot of states have it, is basically the insurer of last resort, and it is for a reason. It doesn't offer the coverage. Normal policy might give you 6 months loss of use. It'll pay for you to live somewhere else while your house is rebuilt, right?
Right.
Well, these policies, Fair Plan policies might be 2 or 3 months.
Right.
And in 2 or 3 months, you're not going to get your house rebuilt. You're barely found a place to live.
Let's hope they're not still putting out fires 2 or 3 months from now.
Right. I was listening to a podcast this morning, and since this gentleman was evacuated a week ago, he's lived in 4 different houses with his family of 4.
Wow.
And a couple of those he had to leave because they had to evacuate.
Yeah.
As the fires move, which is just the crazy thing about this is it's not over yet, right?
Right.
So we don't know what the damage toll is going to be. And the Fair Plan policies, they only have so much money in the bank as an insurance company. And it's not a company, it's the government.
Yeah.
So now what happens? Now what do we do? When they run out of the $377 million or whatever it is that they have in reserve right now.
Yeah, and that's a real good question, because the damage toll here is going to be in the tens of billions.
Right.
The Pacific Palisades is one of the most expensive places in the country. It's right next to Malibu. Malibu experienced a massive fire as well, not quite as bad as the Pacific Palisades, but you're talking about the average home price being in the tens of millions, and you're talking about hundreds, if not thousands of them being destroyed. So that money's probably going to run out pretty quickly.
Well, and the other thing that's been happening too there is their insurance was already going up. People were already getting renewals for their insurance that they were paying $4,000 and their renewal was $18,000.
Yeah.
It's not all movie stars. So a lot of these people, are retired folks. Maybe they're a couple that was teaching and they bought their house in the 80s or 90s and, just lucked out because their house has appreciated 10 times. But as far as, their retirement goes, most of it's in that house.
Exactly.
And now they don't have the cash to go find another place to live. They don't have the cash to put it all together. And so if insurance isn't covering it, then what if they drop their policy?
Yeah, and I think an important thing to note too, and it's never a smart idea, but when you get a mortgage on a home, a prerequisite to the mortgage is that you have home insurance.
Right.
Once you no longer have a mortgage on the home, you no longer are required to have home insurance. So there's a fair amount of these people, probably not the majority, but at least a meaningful percentage that don't have home insurance at all.
Right, right. I had an investor here who had a dozen properties, and he always told me, I'm not going to waste my money on flood insurance. I just set that money aside every year. Well, yeah, then Hurricane Ike came along.
Yeah.
He got flood insurance after that.
I can only imagine. That was a very expensive lesson that he learned there.
Yeah, he's like, wow, yeah, I need to make sure we get that. So now in investment properties, it's not the FEMA plan, it's usually a private policy. But hey, it definitely helps.
And, on this channel, we talk about the broader real estate market as a whole.
Right.
LA is not our market, and it's not one that we've ever worked in. But it is a good indication. It's one of the most expensive price point areas in the country. As you said, the insurance costs are through the roof there. Property taxes are extremely high just because of the home valuations. Mm-hmm. But how do you potentially see, this affecting the broader insurance market? Because one of the hot button topics even before the fires was home insurance is causing homes to bust out of contract because somebody who can afford the principal, the interest, the annual tax that they have to pay on their home for the homeowners insurance, or sorry, homeowners tax. The insurance was causing a lot of homes to come out of contract because they're getting these astronomical quotes. What do you think, if anything, will change as far as insurance across the country?
Insurance companies, they're not the Salvation Army. They're not the March of Dimes. Like, they are there to make money.
For-profit businesses, yeah.
Yes, and at some point, if they have to pay out a whole bunch of money because of a disaster, they have to make up that money somewhere, and they collect it from premiums, right? You pay so much a year for your homeowner's insurance. And so if you have a whole bunch of claims in an area, then they're gonna increase their premiums. And these companies, a lot of them are national companies. So it's not unlikely that they will pass some of that cost on nationwide.
Yeah.
That we will see increase insurance costs down the road. Now, is it going to be double your insurance in Iowa because of the California fires? Probably not.
Probably not.
No, that'd be hard to see. But certainly in California, it's probably going to cost more to insure your home than it would somewhere else.
Yeah. And that's really important to note because everything is interconnected, right? Prices in California don't directly affect the prices in Iowa, but indirectly they do. And the real estate market in the United States kind of moves as a whole with differences depending on region and desirability and stuff like that. What about these people who have been affected? We also talked via text message about some of the loan programs that the FHA offers, to assist people who have experienced disasters like that. Can you get a little bit into that?
So yeah, so there's a little known program, and FHA programs are by the part of the law that it's labeled by the part of the law that addresses that type of loan. So there's 203Bs, typically what people see. There's a 203H though that's intended for disasters. So if your home's destroyed and it's in a federally declared disaster area, declared by the president, then you can buy a replacement home with nothing down on an FHA loan. Normally, you'd have to put down 3.5%.
Right.
But you can do 100% financing on an FHA loan up to whatever the limit is there. Now, in California, the limit's over $1 million.
Right. Sure.
Now, here in Texas and where we are, it's a shade over 500 grand. But because the market is so much more expensive there, FHA, it goes by kind of the medium sales price of the homes in that area. And so you could buy, in theory, $1 million house with nothing down.
Yeah.
Which, if your house has been destroyed and you're looking for a new house, could really be helpful.
Yeah,
now,
absolutely.
Let's say you're one of the lucky folks that has something to rebuild from. FHA can still come in and help because you can actually use that and use a 203K loan. This is a renovation loan. And so if you're looking to rebuild your property after a disaster, as long as it was in livable condition before the disaster, then you can go get a loan to not only, you can refinance your mortgage into a 203K. It'll provide you the money to do the repairs that you need to do to make your house livable.
Right.
Now, do you know why wouldn't you just do a home equity loan then?
Well, I would assume it's probably because your home doesn't have a whole lot of equity because it's currently ash on the ground.
Yeah, the appraiser is going to go out there, and the first thing he's going to say is like, where's the house?
There's no home to appraise, right?
No, there's not much left. I mean, and this is a situation where it hasn't been destroyed completely to ash. This is a situation where maybe it's been half destroyed.
Right.
There has to be something to start with to use that program.
Okay.
But it certainly is something that you can use to help rebuild. Now, is everybody going to stay in California? Probably not. I mean, I don't know. You've watched the news and you've seen people be interviewed. Are they staying? Are they going?
Yeah, I think it's a grab bag. I think a lot of people are very California proud. At the same time, and in my opinion, I've been to California a handful of times in my life. It's probably the most beautiful state that there is in the continental U.S.
I think Texans would argue with that. I'm just saying.
Probably. But I mean, if we're being objective here, the Pacific Ocean, the beach with the mountains in the background,
Right.
I mean, it's tough to beat the weather in Southern California. And that is why people deal with the exorbitant taxes, the exorbitant prices, and some of the stuff that they have to deal with there. But as a real estate agent who does specialize in relocations, I have a lot of clients from California that have moved or are moving here to Texas, and they're coming for our great, ease of business. If you want to start a business here, we have 0% state income tax. You can get a nice house without, giving away your firstborn son and
Right.
grandson. It's
Right.
there's definitely some advantages to being here in Texas. So we are seeing a lot of people leave, which does increase demand in other areas, namely Texas and Florida, which is where
Right.
most of the California transplants end up, is either, in the Houston, Dallas, Austin, or South Florida area.
Yeah. Well, and that FHA program, you don't have to buy it in California, right? If you move to another state, you can buy it under the same program there.
Yeah.
So you move California to Texas, you can get 100% financing on an FHA loan because your home in California was destroyed.
Does the debt to income factor in exactly how it would in any other scenario?
You do still have to qualify.
Yeah.
And if you think about it, kind of goes back to our last podcast, or our last YouTube video. We talked about 2008. Putting people in mortgages they can't afford just never makes sense.
Right.
So if you don't qualify debt to income ratio wise, I'm sorry, but no, they're not, it's just not smart for you or the lender for that matter. We're just asking for trouble at that point.
Yeah. And I want to, touch on one more thing since you bring up the loan and, things that the FHA does to assist. In an industry that gets a lot of bad press, especially for realtors lately, 2024, we got kind of beat up. We had the NAR settlement, we had the allegations of price gouging, and I'm not going to sit here as an agent and say that there weren't some things that we did as an industry that practice-wise that gave us a little bit of a bad rap. But the particular group that I am in, and I'm with eXp Realty, and we have a lot of people in our upline and across our network who are in the Southern California area. Right. And they have said, many of them, so from San Diego up to Sacramento and even as far as like Arizona and Las Vegas, they've come out and said, look, if you're looking to relocate and San Diego is going to be your next home or Las Vegas is going to be your next home, we will do the entire transaction for you and we will give you our commission in an effort to help you rebuild your life. Yeah. If you're someone who is of means and you don't need that, then we will take the commission and we will donate it to the efforts in California as far as helping people rebuild. So I thought that, in an industry that has gotten a little bit of a black eye recently, that was a really nice gesture. Are you seeing LOs do some similar things to try to help ease the stress here? Yes and no.
With the way that loan officers are compensated, like the laws basically set your compensation, you don't have a whole lot of room. But the company can adjust that, to help people out. Yeah. And certainly, yeah. I mean, I think that, I've been doing this a long time, but I've I don't know, maybe 15, 20 years ago, so I'm just going to go help people.
Right.
Money will take care of itself. I'm just going to go help people. And so sometimes that works out great. Sometimes it doesn't. But you know what? I mean, if I focus on that, then that says, hey, first responders, people that have had a bad situation like the California fires, And, one of the things that I've heard too is people think it's opportunistic. If you're an agent in California and you start calling your friends, offering to find them a place to rent, that you're taking advantage of them somehow. Well, not really. You're being their friend.
Right, sure.
After Hurricane Harvey, my sister-in-law, brother-in-law, their house had 4 feet of water in it. And they had a real estate agent friend who immediately jumped on it, found him a house 2 days. And that was uncommon back then. And I mean, we were like very thankful that she did that. First of all, because they weren't going to live with us. But also because, hey, they had a permanent place to call home. Their house of 20 years was destroyed. It flooded before, but it was done this time. Yeah. And so, if you're doing that for your friends, for your people, then I think that's a great thing.
Yeah.
Yeah. And this talk of price gouging, and yeah, there's some that goes on, and there are some agents that are being opportunistic out there. But I think there's bad in every bunch of apples, right?
There is, absolutely. And I think it's important to note too that, if any of you watching this video have been affected by these fires and you're looking to relocate in the area, do send us a comment and let us know, because there is a network of people that myself and Mark know that can assist and that will do things, as I mentioned, give commissions back to help out and things like that. So as a sidebar, just do reach out if you're affected. But yeah, I mean, I think that's kind of a good place to leave it. The fires are going to be ongoing. Maybe when this is all said and done and we see what the insurance companies decide to do and how things are getting rebuilt, we can revisit this subject. But I think it's something that's important to touch on, because it is something that's really affecting the real estate industry, certainly in Southern California, but across the nation as well.